Hello traders, the title of the video is how to trade the reverse bearish engulfment candlestick pattern like a pro. Alright, so probably you already know about the bearish engulfment. So you may say to me, George, what's the point of watching the video? Because I already know about the bearish engulfment. I would like to encourage you to watch the full length of this tutorial so you may understand more, know more about the bearish engulfment. All right. So how do we use it in practical day trading, practical swing trading, practical position trading? What are the best time frame one should look for that? A bearish engulfment, a candlestick pattern. All right. How do you day trade, swing trade, position trade, bearish engulfment, what should you look for? What are the correct steps, to avoid candlestick pattern trading mistakes? All right, this is what we are about to talk about today, because everybody knows what is a bearish engulfment, but when we are talking about practical trading, what are we looking for? And I want to show you different example, and we are looking at HP chart. There was here one here, one here, and what are the differences? What do we expect? And how do we handle the trade? All right. So the first thing that we need to understand that the bearish engulfment will usually take place at a resistance level. This is very important for us if you are talking about a pattern. The first correct question is, where does the pattern form? It's critical in the financial market. It is formed at a resistance level, the bearish engulfment. It is also formed, all right, during a bearish trend. All right, during the bearish trend, price going down, then there is a rally to a resistance level or to a support level. So, i.e., you may see the price going down, all right, and then there is this rally after the price breaks below a key support level. The price will rally into that support level, and we may see here at this point in time, the bearish engulfment. So if that bearish engulfment is taking place at the support level after the price break below that support level and it retesting it, and we are in a downtrend. So you may see here a bearish engulfment. All right. So the best place is when the price is going up. So during a bullish trend, so we can see also at the top of a bullish trend. So price going up, especially those who understand in your wave, at the end of the multi wave, 1, 2, 3, 4, 5 wave, at the top of the fifth wave, we may see, a bearish engulfment. So we count our wave, 1, 2, 3, 4, 5 wave, all right? Now we see a bearish engulfment at the top of the fifth wave, at the top of the trend, or at the top of a bullish move. Price goes out from one support level. Also during a consolidation, you may also see it, because during the consolidation, the price is oscillating between one key level and one support level. So whenever the price reaches the top of the consolidation, you may see a bearish engulfment or another bearish candlestick pattern. But here we are talking about bearish engulfment, a reversal pattern. So at the top of the consolidation, you may see a bearish engulfment. All right, price break below support level, retest that support level, you may see a bearish engulfment. Price goes up from A to B, or at the top of a bullish trend, you may see a bearish engulfment. So those are the places where we will identify valid, bearish engulfment. So I also mentioned to you what are the best time frame you should look for this pattern. My recommendation, you do not have to accept it, you do not have to follow it, down to you. If you ask me, all right, if you ask me, George, what are the best time frame you should look for? That bearish engulfment reversal pattern, I will say to you, monthly chart, quarterly chart, and a yearly chart. So you may say to me, George, you let me down now because I'm a scalper, I'm a day trader. I say, no, I do not let you down. You can see this, like now I'm on the quarterly chart, you see, and you see the pattern is formed, on the quarterly chart. You can drop it down to the 4-hour time frame or to the daily chart after the pattern is completed, or to the 2-hour time frame, or even to the 30-minute time frame after the candlestick bar is closed on the quarterly chart, or on a monthly chart, or even on a yearly chart. The reason why, I'm recommending those time frames to find them. So when you find a bearish engulfment on one of those time frames, it's just a trading setup. So nothing can stop you to go even to the 3-minute time frame and play it. All right. So one thing also I need to clarify about so we talk about the place and the time frames that I would prefer trader to look for that pattern, candlestick bearish pattern. There is something very important you need to understand about a bearish engulfment. So price going up, so we must have first a bullish candlestick bar. So it's a bullish, which means the market sentiment, the engulfment, when we are talking about a bearish engulfment, it means that a market that was bullish before, suddenly, okay, that bullish market, okay, suddenly become very bearish. Not only bearish, very bearish. All right. So whenever you hear the word bearish engulfment, it means that a bullish market quickly turn and become, okay, very bearish. All right. So the reason why we say very bearish is because whenever we have a candlestick bar, the median line of that candlestick bar is very, very important. In fact, that median line of each candlestick bar will allow us to say that this candlestick bar is bullish or bearish. All right? It's not because the candlestick bar, okay, has closed below the opening price, therefore it's bearish. Look at this one here. Look at, can you see? I can zoom into this one. You see this candlestick bar? The dark green is bearish. You see here? It opened there and closed just a little bit below it. Is that a bearish candlestick bar, this one? In theory, all right, in theory, it's bearish because it closed below the opening price. But it's not. It's not bearish candlestick bar. Why? Because the one reason that I'm telling you now is because it closed above its median line. So you look at the range of the candlestick bar, it closed above the high. That it goes far away from the median line. So the farthest the price closes above, okay, the median line of that candlestick bar, the more bullish that candlestick bar is. Though this candlestick bar that you see here, it did close below its opening price, but it's not bearish candlestick bar because it closed well above the median line. So here, why am I saying that? Because you need to understand those things. We have a bullish candlestick bar, and in order to say that we have a bearish engulfment, the second candlestick bar should be bearish and close below the median line of the previous bullish candlestick bar. So this is the previous bullish candlestick bar. Now the second candlestick bar open either above the high of the bullish candlestick. Sometimes you may see this one may open above it and close, but must close below the median line, or this one, the bullish one. So that's why we must always pay attention to the median line. But not only that, even if suppose you were here, all right? Suppose you were here. That's the number one criteria for the bearish engulfment. A market or a candlestick bar that was bullish before, now suddenly the second candlestick bar make it so bearish by closing below the median line. Because the median line of each candlestick bar is a psychological price level that is dividing, okay, the candlestick bar into two zones. The zone above is bullish, the zone below is bearish. So now, a candlestick bar that closed in a bullish zone, suddenly the second candlestick bar forces it back below into the bearish zone, which means a reversal. The bearish traders are now controlling the market after the bullish trader pushed it well above the median line. Now the second candlestick bar opens somewhere up or near the opening price of the first one, or even gap down, okay, but close below the median line. That's what we call a bearish engulfment. And that is one here. You see this one here? This one here, you see this one here? So price going up, boom, 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 boom. All right? So here we are, and we want it to be at a resistance level, okay? Resistance level. Remember, the place of the pattern is so important. So where are the resistance level? It was this resistance price, you see? This was a support before price tried to turn the resistance here. You see price breaks the ball, retests the pink line, okay? Now we are going to we are now at a resistance level, yes or no? That's where. If you see it somewhere else, don't give any consideration to it at all. All right? You see somewhere else, don't give any consideration to it at all. Now, so first candlestick bar is bullish, yes or no? It's open here, close up, it's bullish. Where is the median line? Okay, the range, divide the range of that candlestick bar is into two. This is the range from here to here. Now, the second candlestick bar is bearish. Now, look, it closed way even below the low. That's worse. It closed below the median line, but even below the low of the first candlestick bar. This is a proper, okay, bearish engulfment at the right place. So if you see a bearish engulfment, ask yourself, is he at the right place? If the financial instrument has been going down for long time, I'm not talking about one move, two move, but for long time. So especially you see here, this is another one here, you see here. This is one thing I need to clarify with earlier with Tracy. It came down one, okay, rally up a bit, okay. Here it is, it went down again, big time, very bearish, okay, and now rally up a bit, all right. Now this is what I'm talking about. Now it came down again here. This is 5 move down. 1, 2, 3, 4, 5. So we can say that this stock on the quarterly chart has been going down for long time. Okay. In fact, for area of trade, this will tell us that okay, there's a move down 5 times, possible reversal. Look at the second candle. Boom. This is what we call a bullish engulfment. I will be recording a video to talk about it, okay, very shortly. But look at the following candlestick bar here. Do we have again a bearish engulfment here? Can you see here? The first candlestick bar is this doji here, okay? And look, the second candlestick bar closed below the median line, this one, closed below the median line. But look, the price was going down all this time before. Now we have this tall candlestick bar, which is in fact a bullish engulfment. Now we have a bearish engulfment. I will not trade this one. Well, this is what I'm talking about, the place. And what has happened before, look on your left-hand side, went down 5 times, a long time, and then you see bullish engulfment. Now we see a bullish engulfment, and the second one is saying bearish engulfment. Pause it. If you want to trade it, always use the top-down trading method, different time frame trading method to control the risk. All right? So the criteria, what are we looking for? We want the price to be going up first. We have a bullish candlestick bar, and the second candlestick bar is bearish. Most importantly, closing below the median line of the first bullish candlestick bar, we have a bearish engulfment. Does it mean that the price will definitely go down? No. It means that we have a bearish trading setup. How do we handle it? How do we trade it? How do we control the risk? This is about practical candlestick pattern trading. In order to control the risk, all right, one must now draw the median line of the bearish candlestick bar. Okay, that's the bearish candlestick. We draw the candlestick, we draw it now. Okay, and remember, after the price went up and we have this bullish candlestick bar, the bearish candlestick bar, both candlestick bar must close. If they are not closed, don't play with it. And you will notice, because those who are on a monthly chart, the reason why I do not want you to look for them on a weekly and daily chart and other time frame is because the people on a quarterly chart are position traders, are hedge funds, are big financial institutions, and they are looking at the quarterly chart. They are waiting for that pattern to be formed on the quarterly chart. So you will see it at early stage on a weekly chart, on a daily chart, but it's not set yet. Sometimes it will work on a daily or weekly chart, sometimes it may not. But just be aware that it's more reliable on a monthly, quarterly, and yearly chart. All right. So we draw the median line of the bearish candlestick bar, and now we have, after those 2 candlestick bar are closed, and we are at a resistance level, price went up also. We are at the right place. We wait for the 3rd candlestick bar. What usually takes place? The 3rd candlestick bar will try to retest that median line of the bearish candlestick bar. And this is where we want to look for trading setup, near the median line, when the 3rd candlestick bar is trying to retest it. That's the point where we will look for trading setup. In fact, the trading setup is in place, but we want to enter when the price is, the 3rd candlestick bar opens and is trying to retest the median line of the bearish candlestick bar. So if you look carefully here, you see price went up, yes. We have a bullish candlestick bar, and the bearish candlestick bar closed below the median line. You see here, now those 2 candlestick bars are closed. Now we have our bearish engulfment in place. But it doesn't mean that it will definitely go down. Now we are watching the reaction, the 3rd candlestick bar. So 1st candlestick bar, 2nd candlestick bar, this is the 3rd candlestick bar. Look what it did. Yeah, now we place the median line for the bearish candlestick bar. So from the top to the low, we divide in 2. This is the median line of the bearish candlestick bar. That's it. So now the 3rd candlestick bar, most professional traders that understand, the bearish engulfment will be expecting the same thing like you. So look, it's not by magic because a lot of traders are expecting a retest of that median line. Look, phew. Retest yes or no, near the median line is key. And that's where you're going to look for the trading signal and look for the entry. And those who sold it, they are the one that create the shadow. So prior went up first to this level to retest, they sold it and it come down, down. That's where you want to sell. That's where you are looking for your trading signal and your entry near the median line of the bearish candlestick bar. But you must use a top-down trading method. Trader always ask me, John, what is that video about top-down trading method? Just YouTube search, all right? Top-down trading method video by dayprotraders.com or top-down trading method video by top-down trading video playlist by dayprotraders.com. You'll see video by dayprotrader by all means, or multiple time frame trading method by dayprotrader YouTube channel. All right, or different time frame trading method by dayprotrader YouTube channel. You may also see some video from 24 stock trader, okay, YouTube channel. That's me again. All right. So this is what we are looking for. After we have the setup, which is okay, the bearish engulfment, we wait for the signal, which is a rally near the median line. We will see, and then we implement, okay, and then we select a low risk entry point on another time frame, and then we sell it down. All right. If the signal fails, close the trade. If, for instance, you have a bearish engulfment, but you did not have a bearish signal, you cannot sell. It's not because we have the bearish engulfment that definitely we should sell. We are now waiting for the signal. If there is no signal, we do not sell. A word of warning also, sometimes you may see the bearish engulfment as it was here, but the following candlestick bar will go back up and become bullish. So don't be surprised sometimes that the price can resume the bullish trend after a bearish engulfment. There are many reasons, can be fundamental reasons. Probably the bearish engulfment is in place because people are thinking that a company may lose a court case or a litigation or a bad news, or they're going to fail to meet analyst forecast. So market is initially bearish. Suddenly we have that bearish engulfment. So everybody think that definitely, okay, everything is going to be bad for that company. And the next quarter or next month or following year, things turn around for them, and quickly now you see a tall bullish candlestick bar popping up here. So it's not guaranteed that because we have a bearish engulfment that definitely will have a bearish move down. One must wait for a clear-cut signal, and very importantly, use a top-down trading method. Okay. Now, if you look here, there was another one here. This is another scenario. Let's remove those lines, and I will explain it to you. Okay, what has happened here, so you may understand exactly how you will trade the bearish engulfment, a powerful bearish trade. So one more time, you can see that this is again a price going up. That's very important for us. So price going up. Okay, it's going up, yes or no? Okay, where is the best place to see the bearish engulfment? It's at a resistance zone. So price going up, you see this candle here is a doji with a tail. Let's put the median line for that candlestick bar. Here it is, the median line. Can you see? You have with a tail. That's the median line roughly there. The following candlestick bar is bearish and it closed below, well below, even below the low of that candlestick bar. Here we have a bearish engulfment. Now, we want to make sure is that bearish engulfment taking place at a resistance level. Yes. Why? Because there was a resistance here before. Now, it's a resistance zone at $24 for HP stock. Now we have a bearish engulfment at a resistance level. So it's a good place. Price went up. Good. All right. Bearish engulfment in place. Yes. Good. All right. Is he at a resistance level? Good. Now what do we do? Now we place the median line for the bearish candlestick bar. So for a high, a low, you can apply Fibonacci retracement and just highlight the 50% Fibonacci retracement of that candlestick bar. And here it is. You are waiting for the third candlestick bar. This is it. What are you waiting for? The rally to test the median line. Did it happen here? Yes, it did happen here. Okay, see? So you are not alone. Professional traders are orderly market participants. They expected it. And they know that that's the best place to sell. And they are waiting and wait through. In fact, experienced traders, after this bearish engulfment, they may be contrarian traders because they know that they probably try to bounce up. So some professional day traders, after they see the bearish engulfment, they will day trade from here to push it up here, and then it will sell it again down. And it happened twice. So after that, price went down a bit, but look, it came back again. So it was quite volatile here. You see, sometimes people can be taken out. So if you're in a trade, you sell it here, and you are very, very confident, you don't secure your gain. Look at the second candlestick bar. Probably, sometimes you will see that due to, okay, some bullish activity. So for instance, especially during the earnings season, all right, the earnings season, all right, which is the first month of each quarter, all right, earnings season, the first month of each quarter is the earning period, all right, January, April, July, okay, October, okay. So now during those times, you may see that if, for instance, because HP stock is belonging to a technology sector, if, okay, Apple is has released a very bullish, okay, earnings, and the major technology stock have released, okay, excellent earning result, that will have a positive effect on their peers, okay. Therefore, sometimes those economy news that are coming from other company, other stock, may influence another bearish stock. Though you see a bearish engulfment, and here we are, suddenly the market became bullish for that sector, and now you see it's coming back up again. Phew! You wonder where is it coming from. Now it's retesting that media line for the second time. So once you enter the trade, price move down, secure your gain, move your stop loss to break even, use call option to control the risk, and don't be too greedy. And you see here, it was quite volatile, but the strategy we apply is still valid. Price retesting the media line, okay, and that's where exactly what you are looking for, okay. All right. Do you agree? Let's remove my pitchfork tool. There was another one here. You see again, price going up. Price going up again here, look. Beautiful going out. Now we have that, okay, candlestick bar here, and it closed a little bit above the opening price, a little bit bearish, a little bit bullish. Sometimes we disagree that's bullish, but this is the point I'm making, all right? This is the point I'm making. Let's look at this candle for, okay, educational purposes. Okay, you see this candlestick bar. Now, yes, it did close a little bit below the median line. So, though the opening price, the closing price is above, okay, the closing price above the opening price is still a little bit below the median line of the range of this candlestick bar. So it's not very, very bullish. But we can argue that because it closed, okay, above the closing price of the previous candlestick bar, we can accept it as a bullish candlestick bar. You understand the exercise I'm doing here. So if you call it as a bullish, all right, and this we see here now, this is another engulfment. Okay, price closing below, okay, the media line of the previous candlestick bar, price goes up. So if you accept this like this, then again we can apply that strategy. But this is not a perfect bearish engulfment, because it's not normally when we are looking for bearish engulfment, we want the two candlestick bar to have a kind of body. You see here, this one got a body, this one also got a body. That's what we are looking for. This is a nice, beautiful, okay, bearish engulfment. All right, this is okay, not too bad. This one got a tail. We'll prefer it to have a body also. But here, it become a little bit more, okay, funny, all right, so to speak. And we have again another one here, you see. Price goes up, okay, the top one here. And look at this. It closed below, even, okay, below the median line of this one. This is again a bearish engulfment. But if you look at this example that I'm showing you here, I'm here now, okay, the price did not retest the median line. So you will be placing your median line for the bearish candlestick bar. But look, the price did not come there. How do you handle that? That's a very good thing. So sometimes, like you see here, it did not rally up as it did here to retest it. As it did here, it did retest the median line of the bearish. It did not. So what you need to do, all right, you just need to remember that the best place to sell after the bearish engulfment is near the median line. If the price couldn't, okay, retest the median line, we can look for an opportunity to sell near the low of the bearish candlestick bar, which means break below that low, retest, and turn around. So you'll be highlighting the low of the bearish candlestick bar, and you will be monitoring the reaction of the price, looking for weaknesses near that low, because it did not come, okay, near the median line. So we are taking it down straight away instead of bringing it up first before selling it down. But normally, if we want to sell high. That's why we want it to go up. So we want to sell high. We were expecting a rally near the median line. That's beautiful. That's easier to sell. But this makes it a bit tricky for new traders. You see that is. Or what you can do, you can also choose the median line of other candlestick bar that are here. So if this one, so you can look at. So you see this candlestick bar here. You can also pay attention to the median line for the nearest candlestick bar near the low of the bearish candlestick. So this is the low of the bearish candlestick bar. Look on the side adjacent to that low, whether there are other candlestick bar here. Pay attention to their median line also, because sometimes the market will prefer the median line of those candlestick bar near the low of the bearish candlestick bar. Ladies and gentlemen, I do not want this video to be too long. All right, we are talking about how to trade. Okay, the reverse of bearish candlestick, the reverse of bearish engulfment candlestick pattern, like a pro. It's a reversal pattern because the financial instrument is going up first. All right, now we see a bearish engulfment alerting us that a market that was bearish suddenly become very bearish. Not just bearish, but very bearish, because the bearish candlestick bar closed below the median line of the previous bullish candlestick bar. Okay, now we highlight the median line. Both candlestick bar must close. All right, now we highlight the median line of the bearish candlestick bar. We are expecting, okay, a rally into the median line where we'll look for a bullish, bearish trading signal, and then we take it down from there. Okay. Sometimes the price may not rally to retest the median line of the bearish candlestick bar. In that case, we highlight the low of the bearish candlestick bar. We pay attention to the candlestick bar that are adjacent to that low, and we highlight the median line of those candlestick bar also, the key level, and we trade around it looking for weaknesses. All right, it's not because we have a bearish candlestick bar that definitely the price will go down. All right, sometimes the price can go back up. All right. In order to control the risk, one must use different time frame trading methods. All right, I explained to you to set that video about multiple time frame trading method. All right, and if I have time, I'll put it also in the below. Okay, so those are the things you want to look for. So first thing, where does it form? Form at a resistance level, and also during a bearish trend. So in a bearish trend, okay, we are waiting for the rally into a support level. All right, okay. All right. So now we can see it also. Okay, that's what I show you here. Break below, it tests. Okay, a key support level, bearish engulfment, or at the top of a bullish trend, especially in the fifth area wave, or on the top of a bullish move. You see here a bullish move on the top of consolidation. Those are the places where we want to see the bearish engulfment. So to avoid too much blah blah blah, it must be at a resistance level. Warning, if the price has been going down for some time, like I show you here, 1, 2, 3, 4, 5, you see a bullish engulfment followed by a bearish engulfment. You may say, all right, it has been going down for too long. I don't want to be the last person to sell it. You can just ignore that bearish engulfment and look for a better one at a resistance level when the price was going up for some time. But remember that when you have the engulfment, don't get too excited and think that definitely it's going to go down. The price can go back up for many reasons. As always, the bearish engulfment, okay, reversal, okay, a pattern, it is a trading setup. One must always use different time frame, top-down trading method, multiple time frame trading method. So you see on a monthly chart for swing trading, monthly chart, daily chart, hourly time frame. You see on a quarterly time frame, quarterly time frame for the trading setup, weekly time frame for the signal, 4-hour time frame for the entry, or quarterly time frame for the setup, okay, 3-day chart for the signal, and okay, 4-hour time frame or 2-hour time frame for the entry. You see on the daily chart, which I said to you, it doesn't work all the time. You may say daily chart, hourly time frame, okay, 10-minute time frame. 4-hour. You see on a 4-hour time frame, you want to day trade. 4-hour time frame for the setup. If you are TSTW24 trader, you go to the first best time frame and take the signal of the TSTW24 on the first best time frame. Or you see on a 4-hour time frame, you see, okay, that's the trading setup on a 4-hour time frame. Check what has happened on the weekly time frame to validate your bearish engulfment. So like here, you see on a quarterly chart, okay, bearish engulfment. Personally, I don't want the video to be too long. That's why I did not talk about it. We go to a higher time frame to validate that bearish engulfment. All right. So for those who are using lower time frame, like a week daily chart, okay, 4-hour time frame, If you see on the daily chart, check the weekly chart to validate it, okay? If you see it on the weekly chart, see the monthly chart to validate it. If you see on the 4-hour time frame, at least look on the daily chart to see whether it's making sense also on the daily chart. All right, this is very, very important. And then you see on the daily chart, implement a top-down trading method. You see on the 4-hour time frame, 4-hour time frame will be for your trading setup, okay? The 15-minute time frame for the signal, and the 5-minute or 3-minute for the entry. Multiple time frame trading method will allow you to control the risk. So in case, all right, so in case that bearish engulfment, the price is about to go up instead of going down, you will instead receive a bullish signal in the vicinity of, okay, that median line, and then you'll be part of it as the price is changing direction after a bearish engulfment, going back up again, and everybody, most of the people, the price will run very fast because those who are trading the bearish engulfment like a magic wand, just sell, hoping that everything will work well, they will be taken out of their trade, and their stop loss, as their stop loss is taken out, the price will run fast. And you are filled, you'll be seeing that the price will run fast, and you feel very, very good, and you'll be, okay, congratulating yourself that you are now trading like a pro using a top-down trading method, all right? Okay, I think I've covered everything, so if I forget something, let me know in the comment section. So this is about how to trade the reversal bearish engulfment candlestick pattern like a pro. It's a reversal pattern at the top of okay, a bullish trend, a bullish price move, okay, at a resistance level, okay. It's a bearish warning, okay, a market turning from bullish and becoming very bearish. If you have any question or suggestion, all right, put in the comment section, and in due course I will be recording another video, okay, to answer your specific question. We are the GSTW24 traders talking about how to trade a reversal bearish engulfment candlestick pattern like a pro. I will be recording another video very shortly when I will be talking about how to trade the bullish okay, engulfment reversal pattern like a pro. Happy trading to you all, and speak to you soon.